Hi everybody, welcome to another update on the gold forecast, the index, the holy grail to predicting gold prices. Last month I thought gold was going to go up, but then Trump won and crushed gold lower. But it has rebounded a bit and now it's flat. Actually, it's not that bad, it's actually just flat. So let's see where we go from here. Um, Let's take a look at the gold forecaster index. Latest data point is weaker, so it's actually pointing back down. It's still above zero, so there's still growth, but apparently it's going to be weaker going forward. Tail roll rate not that strong. Misery index also not strong. So yeah, this tells me the labor market is not that bad. It's actually improving a bit. And inflation is also not going up. So yeah, not that good for gold. Real output, yeah, pointing up. So negative real output pointing up. That's good for gold. This is a bit flat. ETF flows are not really rising. GLD had a bit of a dip and then went up a tiny bit, so it's not that bad, but it looks flat to me. COMEX improving a bit. LBMA is also improving a bit. I still need new data. This is not that good. China gold demand down. You can see the trend. The trend is not looking that great. I think the Chinese are maybe getting back into real estate. Real estate has rebounded a bit. Could be that they are back to selling gold and getting into real estate. Silver demand up. SLV is supposed to go up, but the silver price is still flat. Not sure what's going on. COMEX up, but now again flat. Central banks are still buying, so this is the latest data. We're still in the positive. So central banks are still pushing gold higher. Then, yep, China, still new data coming in. Probably they are still not buying, but secretly they are. Reserve composition has improved, but this is September data. Yeah, US mint sales also not good, going down, so retail is not buying. Silver premiums keep on dropping. That's not a good sign. Junk silver premiums also pretty weak. So all in all, not a good sign. And Shanghai gold premium still negative. It's improving a bit, but it's not positive yet. So I do see a lot of weakness coming in. Yeah. Shanghai silver premiums have dropped a bit, not at zero yet, but weakening. Gold premiums around 4%, also weakening. There's some good news here that the open interest went back down, so typically that could be a bottom. Yeah, the shorts have come back here lately. Silver not so bad, but gold shorts going back again. So it's not looking that great. I still see positive momentum, but the momentum is weakening, and this is not rising. Real yields still going down here. Yeah, on negative real yields, so this is actually positive. But yeah, the trend is down, not good, and December should be seasonally a strong month going into the new year, but yeah, we're not seeing it yet. What else? Bullish percent index was bottoming. Let's see where it is now. Bottoming, yeah, it's back into an uptrend, so it could be that we see a momentum up in gold. This is a long term, still bullish, of course. But yeah, lately we have seen weakness even in this 30 to 10 ratio, and here getting back to zero upsides. That has risen to a new high. That's good. So that's positive for gold. Near term for a spread has also improved a bit. Let's take a look. So you want this to be really negative so that they cut rates. Well, it's not that negative yet, but it has gone down a tiny bit. So it's improving. Okay, so as long as we're negative, it means that we're still going to go into a recession. It's high likelihood for a recession, and that would be good for gold. This 2-year yield curve has gone down a tiny bit, but it's still elevated. I want to see this go lower to get a better outlook for gold. Foreign gold deposits are still rising. That's a good trend. Oh, this is an important one. So the gold futures curve has actually shot up here from 2028 to 2030 onwards. So normally the curve looks like this. And now for December, the curve has shot up, so steepened. This is a very good sign. For silver, actually the same. So this has shot up. You can see the gap here. So this is long term, of course, but this gives me hope that gold will head higher to 3,000. Maybe at a slower pace, but it will go up. Fundamental value was somewhere here, still bullish, so undervalued. Okay, so short term, there are some signs of weakness in gold. But long term, I think we're going to go higher still. Let's take a look at deficits, because this is deficit day today. And this could tell us something about the dollar. The dollar has been very strong lately. So is this going to roll over or not? Okay, this looks good. Going down, so more deficits, typically bad for the dollar, good for gold. The latest data improved, but long-term trend still down. But of course, this is not good for gold, and this goes up. This needs to go down. Here as well, moving back up, but this trend is down. So it could be that for next month, this goes back lower. Export import prices. This one went up, this down. So, and the deficit is not that great anymore. So that's bad for gold. Yeah, prices up, that's inflationary, so good for gold. And this is actually new data, Q3, both going up, imports, exports up. You don't want to see this because this means that GDP is rising, and that's good for stocks, but not for gold. We want to see recessions, and this doesn't look like a recession to me. So more and more data is saying that the economy is not doing that bad. Okay, and that's why gold is a bit weak lately. Let's go over some blog posts. Uh, let's start with this one. This is a nice one. I think energy is not the place to be. I still think that. And you can see that oil has been pretty weak. It's probably going to 60 next year. But I still think that gold will go higher. Maybe not soaring higher, but 3,000 is very much possible. So this crocodile jaw is going to keep on getting wider and wider. And there is evidence of this. The evidence is in the futures curve. So the crude oil futures curve has gone down. So this gray line went from here and it dropped, the whole curve dropped, and we're approaching 60 almost. So it's going lower and lower, and we already know the gold futures curve is getting higher and higher. So this is the scenario, and that's good for miners. That's what I think. Short term, not that good, but look at the long term. The long term is that nobody owns gold as a percentage of ETFs. Nobody owns gold as opposed to 60-40 portfolio. This should still go up. Nobody owns gold as reserves. If this goes back here, yeah, you can easily see this is a log chart. We could even go to 10,000 if this ever goes to here. And the trend is your friend, okay? These are long-term trends. Physical gold holdings also very low, still needs to go higher. So I think we could see 3,000 very soon. And then gold is going up, but the miner margins are also up. So if gold keeps on rising, then you could see that these margins are going to improve a lot in the coming years. So these were bad margins. These are very nice margins, okay? So this gap is the gold price vs the cost of production, and that's going to even improve going forward. So I still believe in the miners. Step Gold was one of these miners that are extremely cheap. Just look at this. Step Gold is going down while gold had been going up by $600. I mean, this is one of these arbitrage opportunities where you should buy some. Of course, it's not in production yet. They still need to build the ATO project, but it is a good risk reward opportunity. Non-farm payrolls coming later on. Let's see if we are going to see these revisions. More and more revisions means that gold should be going up. So this is inverted gold. I expect revisions of in the 1 millions. So um, this chart is going to go very low and gold should shoot higher. Let's see if that happens. Some uranium. Yeah, this is the AIC of uranium. So we're currently at maybe 50 AIC cost curve. Um, uranium price has been going down, and that's typically the case because uranium will eventually go to about 1.5 to 2 times the all-in sustaining cost. So I think 70 to 80 is the long-term price. So I'm not really that bullish on uranium because of the cost curve. Sprott Inc. updates. They bought these miners and sold gold fields. Another interesting one was Perpetua Resources. This one, that's also a new holding. That's because we have a anti-money ban, and they produce anti-money. So, or they have the resources. They are not producing yet. So this is one of the companies that Ericsson bought, and it has been going up. So it's interesting to look at these holdings each quarter. Oil is going in surplus, as you know, not good for the oil price. Yeah, Daniel has upped his outlook on stocks going up 20% in the next 2 years. It's very much possible. It was like this, and yeah, he has upped it to 8,000. I'm not buying this because it's too overvalued for me. I like cash flows, and these are pretty overvalued compared to their cash flows. So I'm not buying it. But it could go up. You know. For oil producers, what does this say? This says that break-even prices have been going up since 2020 until now. So break-even prices up, almost at 100 even, while the oil price actually went down to 70 and going to 60. So you are going to see a lot of trouble for these oil producers. So I would not be buying this sector. Nomi Prince saying that gold is going to 9,000 in the future, going to 4,000 end of next year, and then 5,000. Well, hopefully this is true, because then the gold mines would be going up multiples. So that's what I'm betting on. Central bank gold reserves, yes, they still need to buy a lot of gold, especially these ones here. Brazil, yeah, Canada doesn't even have gold. China still needs to buy some because they still don't have enough compared to the GDP. So central banks are going to support the gold price. And Citigroup saying oil to drop to 60. We have seen that in the oil future curves. Okay, so what is the conclusion? Conclusion is gold is going higher, but definitely not at the same pace as before. Okay, 3,000 maybe by next year is what I think will happen, and oil going down. So I'm staying with the gold minus. Remember the crocodile jaw, and I'll see you in the next video. Bye.